Hello, I'm Stephen Ho, trader and founder of TheStopHunter. Now, last week was a crazy start to 2022. We had, interest rates igniting, stocks slipping, especially tech stocks, cryptos crashing, crisis in Kazakhstan, and to throw in on top of all that a bit of Evergrande Chinese property crisis into the mix. But there was one asset holding reasonably strong over that whole period, and that was WTI Crude Oil. Now, in this video, I'm going to look at the technical analysis and a few fundamentals and a bit of sentiment to see if that bullishness can remain and see where the price is heading next. Let's kick off the analysis with some sentiment. Down the bottom, that grey line shaded area you see is seasonality. We've been a strong uptrend, and that goes through January, but then starts to peter out in February, goes very flat, and then mix through March and April. Now, above that, the red line is the large commercials, and the black line, the large speculators. And here we're talking about commitment of traders data. And you would normally expect the large speculators, black line, to be going in the same direction as the price, and vice versa for the large commercials. But actually, we have the reverse situation going on. The large speculators are still bearish at the moment. It'll be interesting to see how Friday plays out when this data is updated, because it does feel more bullish at the moment. But they may be taking the same position as per other markets, cryptos, other commodities, stocks, which is bearish at the moment. But the price has been up, so an interesting divergence there and something to definitely look out for. Now, the Baker Hughes rig count numbers are a good barometer of what's going on in the oil sector as a whole, and the numbers are still growing, so we're still seeing strong growth. I'm focusing on the US line there. From the last count, up +2, and from this time last year, up 228, so still looking bullish. Now, last week, inventories were worse than expected at -2.14 million barrels, and this week they are forecast for -1.95 million barrels. So look for any outlier moves there that are, like I say, a break from what we've been seeing over the last few months. Now let's get into the pure technical analysis, starting with the weekly line chart. You can see the steady rise in the price over 2020, from the summertime up through 21. A bit bumpy, but still trying to push towards those highs in the early 80s. You can see the pink line there looking like a bit of possible support if we have a strong pullback. That yellow shaded area is also an area of great price activity and support and resistance levels potentially, just around those Fibonacci points. So a big move down, it breaks through that pink line, then $63. You can also see on the right there the volume profile going on, and there's a lot of noise between $50 and $70. But overall, it's still looking reasonably bullish as, like I say, it pushes on towards the early 80s, and then next stop on the weekly chart according to Fibonacci's is the early $90. Now, for you crude oil bears out there, I have a line and break chart for you, and it's a 4-line break, and I use a 2-bar reversal here, and we're looking at the downside because the price has been on the way up. On the left we've got a daily line break, on the right we have a 6-hour. The 6-hour will give us some shorter term signals, but if we start with the daily on the left, it's a long move down, $66.17 for that break where you'd go short, and timing it in with the stochastics below that. And on the right, the 6-hour chart, because it's shorter term, we're going to have more signals there, and it's around about $79 before you'd possibly want to go short. Now, there's a lot going on the daily Heikin-Ashi. You can see the signals at the bottom. We've got the RSI with the moving average crossover bullish, and we've got the regression bullish, but we can see above that volatility falling down a little bit, getting a bit neutral, as is the volume. And heading on to the price, I suppose the standout feature, there's that purple triangle building up, for a possible breakout up, as the price has been running along the pink 2 standard deviation regression bands there, and it failed to break that area around just above $60, where you can see the green line and the 4 markers, and our 2 line pink box breakout there, where we did have a sell a week or so ago. That's been negated as the price has moved back to neutral within those, I say, 2 lines, and it's probably mid 80s for a buy signal to show itself on that setup. But overall, price continuing in an uptrend. The, I suppose, momentum not really that strong there at the moment, but like I say, still feeling more bullish than anything else. So the Renko chart, what does that tell us? Well, we're using a 50 cents block size. Our signals at the bottom there, the modified DMI, that's giving us a bullish trend. But the 2 signals above that are mixed. The stochastic is currently bearish and the regression bullish. Heading back onto the price, we got a breakout of the 2 pink line box breakout set up in late last year, and that's continuing upwards, trading above the longer term moving average. In terms of Fibonacci potential targets, next upside mid 81s, and then trying to push up to $87, $88, and then if it can really break above that noise, we could be talking mid 90s. But if it fails to the upside, then as I said, there's a lot of noise around that 61.8% line, around about $73, so that could be a area of support for the price. But if it breaks there, look for the 38.2% in the early 67s. So to summarize things, then, I'm going to give WTI crude oil a weak bullish overall score. Heading up to the top right there, the other indicators, seasonality still bullish, rig count still bullish, COT bearish just because of that divergence. The line break is for those bears out there looking for a short trade. Inventories still pretty neutral. The Heikin-Ashi and Renko charts both weak bullish, and if we head into the potential targets to the upside, if you'll be more aggressive, venture around 81, given a risk reward of 2.3 and 4.67 for the first 2 targets to the up, and to the downside coming in around 79 area as per that more aggressive line break chart, and giving us risk return 2.1, 3.67 to be a bit more aggressive there in terms of tight stops and potential targets. So there's a bit to be had from both ways, bullish, bearish, but at the moment overall looking more bullish. So crude oil holding up despite a lot of negativity around at the moment. Let me know in those comments below what you think of today's analysis. Do you agree, disagree with it? Where do you think oil might be heading next? Let me know in those comments. Love to hear from you. Now, if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching. Good luck with the trading, and I'll see you in the next video.